Hey guys, welcome back. In today's video, we are talking about the end of short selling, the AMC money outflow, how short sellers lost $420 million, and many more in this video. First, we take a look at this. AMC will rip faces off. Years of infinite naked short selling is about to come to an end. If you thought 2021 was big, this will be 1,000 times bigger. Bigger and better than 2021 GME and AMC. There's no way out for the shorts except liquidation and closing their shorts. So this is obviously something that we've obviously talked about. Now, there's many factors leading up to this. Some of the factors we've covered in our recent videos is obviously talking about the over leveraged positions these short sellers have, how they're running out of capital. More importantly, the lenders, these banks, how they are also in over leveraged positions and again are losing out tons of money. So these are all, of course, factors as we talked about, which obviously caused the liquidation of these short positions. But another thing is understanding something that has happened recent, obviously with the election of Donald Trump, and something that we've seen in the past is that Donald Trump was someone, and again, it was a viral clip where he called out Ken Griffin, and you can even see that in the video what he said was, Ken Griffin, a Citadel, what a guy he is. Where the hell is he? He's trying to hide some of his money. Look, he doesn't want to stand up. Where the hell is Ken? So what we've seen in the past is obviously Donald Trump doesn't have a good view of Ken Griffin. And now with him obviously being elected, it's very likely that he is going to be taking some actions upon Citadel and in general kind of just the short sellers, because what we also have to understand was that during this whole election process, Elon Musk was someone who was obviously supporting Donald Trump, and Elon Musk is someone who dislikes the short sellers a lot. Now, I don't want to get political into this, but it's just understanding some of the history that they had in the past, and it's just talking about another added factor. Again, this is one of the factors that we talked about along the lines of course, over margin, where we talked about the illiquidity, and of course many more. I'm curious to hear what you guys' thought on this is. As always, like I said, I don't want to make this political. It's just talking about some of the history they've had in the past. Now, let's take a look at this, and is why I'm also talking about, why it's good to talk, understanding the regulations that could be happening, because are you wondering why your ticker is down 90% plus while Nvidia is up 100%? Because they're selling retail IOUs, they never deliver your securities. That's why there was 216 billion FTDs last week. They're selling securities they don't own, can't borrow, deliver, or settle. They artificially devalue our companies with billions of synthetic shares created with their free bottom. You and I could also be billionaires if we could sell securities we don't own. And so this is why we obviously talked about why bringing in more regulations, why understanding that there could be some stuff made towards these short selling rules will obviously be beneficial for us, because one of the biggest reasons for why we're seeing our tickers go down isn't because the tickers that we've invested in are bad companies, isn't because we can't understand the fundamentals of a company, because at the end of the day we do know what we are invested in, and we also do understand that the reason for why these stock prices are going down isn't because it's reflecting the value it should be, but rather because it's faced with constant suppression and manipulation, and that's what's stopping us from growing, and that's the important factor that we obviously have to understand. Now, let's take a look at this. So this is talking about AMC, did we buy something? And you can see this user asked, did I miss something? Where did 250 million go in one quarter? Because obviously what we saw was for Q2, we saw AMC had 770 million. And then for Q3, we saw that AMC went down to 527.4 of cash and cash equivalent. So this is obviously a very good question to ask. And again, this is something that we've talked about. But some of the things we have to understand is that AMC is a company that is constantly attacking its debt problem. And that's why we understand, in terms of how the managements want to progress as a company. You can already see as we're talking about the subject of debt, that they continue to reduce debt in early months of Q4 2024. Another 45 million of debt due 25 and 26 strikes from the balance sheet, with 10.7 million debt for equity swap. So this is something that we've seen. Now, we all have to understand is that AMC is a company that is continuously trying to restructure, trying to fix, and at the end of the day, trying to pay off all their debt problems. So when you ask one of the questions, where is the money going? Well, understand that they're of course going to be spending money on the debt that they have to obviously pay it back, because it saves them interest, which pays off in the long run. And by paying off debt, it gives them, of course, a good view on the fundamentals. But some other things that we also have to understand is that AMC spending cash is, of course, a good thing. Even if they're not spending it fully on debt, by understanding that they are spending cash, they are obviously making investments. One of the things that we talked about again in our past videos was obviously understanding that they've spent over $100 million on Coke machines, and that's of course going to cost them money as well. And that's what we talked about. Those are the investments that they are making. They're making what I think are very good investments, which allows them to increase their revenue, which allows them to kind of benefit of everything. And that's why you can see we are seeing the improved EBITDA for AMC now. It's precisely because they are spending this money that they are able to put themselves in a position where even with a lower box office, we are able to make more money. And so, in terms of asking the question, where are they spending their money? I talked about debt, investments, and of course many more. And is it a good thing that they're spending money? Well, of course, because no matter what you're doing with it, you're making good use out of it, whether it's paying off debt, whether it's trying to create more revenue. These are of course all good things. Now, again, a quick video for those people who didn't look at the third quarter earnings. Essentially, what you have to understand is AMC total revenue, they made 1.35 billion. They lost 20.7 million overall this quarter. Their adjusted EBITDA was 161.8, which I want to point out quickly. It was the second best in the history for Q3 in AMC's 104-year history. Operating cash flow, 31.5 million. Cash reserves, as of September 30th, like we talked about, they had 527.4 million. So we are in a very, very good position. And again, one of the biggest things that I want to talk about was obviously the EBITDA, which is allowing us to understand that they are obviously operating very, very well. And at the end of the day, that's what we want to see. And again, we're going to be continuously improving that. And when the box office gets even bigger, we're obviously able to make even more money. Another thing is to understand is it's important to have a long-term approach with AMC because of the blatant manipulation documented daily in the official spoof report. Now, obviously, when we take a look at the price of AMC, we're down 6.11%. And this is coming off the back of a good earnings. But like we talked about, it's important to understand that the fundamentals for AMC is different from the fundamentals from other companies, because what we need to see from fundamentals is it going to increase the price of AMC all of a sudden, but rather it's understanding, is AMC actually operating well? Because again, it's the long-term approach that's important, because we are seeing the blatant manipulation like we are seeing now. And you can even see the big news is obviously AMC achieved the new Q3 record of admissions revenue per patron and an all-time record for concession revenues per patron. And that's the important factors. And the very fact that we are not seeing that reflecting in the price is indication that we are obviously being manipulated and suppressed. Now, let's take a look at another factor. What we see, breaking, the Fed has cut rates by 25 basis points. For those of you who don't know, we obviously saw a cut of 25 basis points. And now another thing is in terms of relating with AMC, what you're seeing is that every time that the Fed cuts rates by 25 basis points, AMC saves $5 million on annual interest payments. So the very fact we saw another 25 basis points means that AMC has saved another $5 million in annual interest payment. And that's obviously another good factor as well. And so this is why, in terms of understanding how other macro factors will affect AMC, this is obviously one other factor to understand. You can even see this. Couldn't resist the opportunity to buy time while AMC is on sale, increasing Sweden's part of the total AMC flow even further. So this particular user, Stefan, has obviously bought into tons of AMC and is someone that we've of course covered on this channel. And the reason why I want to say this, and again, this is not financial advice, I do take a second of so make sure to do your own due diligence and research, but it's just understanding the fact that we are constantly seeing people invest into AMC. Even on down days where we're seeing AMC down 6.11% on the back of a good earnings, we're still seeing people buying in. That shows us many things. Firstly, it lets us understand people are confident in AMC. Secondly, the price of AMC dropping isn't made from people selling, but because of the naked shorts, because of these synthetics, because of the suppression. And that's what we are, of course, witnessing. Now, when we take a look at the reverse repo, we're seeing the reverse repo at $159 billion. So again, it's still fluctuating between the range of 150 billion to all the way up to 200. Like you said, it's not going to be all of a sudden we drop down to zero. It's not going to be all continuously going down every single day. It's taking a look at, in terms of a longer term perspective, what's going to happen. So we're seeing it fluctuate 157, 170, 159. We're seeing it fluctuate between these levels. But at the end of the day, it's important to understand is that, are they losing money, and is the money going down? And yes, it is. And that's what we have to understand. We are going to be seeing that illiquidity problem really happening for these guys. And when we take a look, something that we talked about, short sellers in DJT lose $420 million. So recently we've obviously talked about DJT, and we talked about how the short sellers have now lost $420 million. And again, I suspect it's going to be even bigger for some companies. And obviously we talked about how this relates to other stocks as well. And you guys, thanks for watching. I'll catch you guys next time.